Hello, Shakthi, and hello, everyone. Today is a great day to talk about stocks, not just any stocks, but your favorite one, dividend stocks.
We will discuss about an ETF today, not just an individual stock. And this is one of the favorite ETFs among dividend investors. There's always a debate on whether to buy this ETF or buy individual dividend stocks. I personally own this ETF for a while. I was really attracted by the dividend yield and the dividend growth that they had achieved in the last 10 years. The ETF was first introduced somewhere around 2011-12. Since then, it has been performing really well. It's called SCHD. It's from Schwab. There are around 100 stocks which are filtered and they are allowed to pass through a rigorous test, and only very few get into the top 100.
Okay, let's start everything from the beginning. Firstly, ETFs. If we can give a little bit of definitions and just take everyone on board, what is ETF and what is specific about this particular dividend-oriented ETF?
Yeah, without going into major details, so ETF is exchange traded fund, and you can just buy them like any other stock. And other advantages, unlike mutual funds, you can buy and sell them any time of the day. The
Yeah.
tax implication is similar to buying and selling a stock. These are the attractive features of an ETF, and they will hold a bunch of stocks depending on the ETF's purpose. So the purpose for SCHD is to get quality dividend stocks, and that's what they are focusing on. And you have around 100 plus dividend stocks in them.
It's like diversification because you are not picking the only single company, but you have a theme if it's dividend stocks or sustainability oriented or particular sector. What is that unique about this ETF?
So we won't get into all the details on how they pick the stocks. We can do that as a separate video. But on a
Yeah.
high level, as I mentioned earlier, they try to pick quality dividend stocks which meet certain quality criteria, so that you end up owning a bunch of stocks which are supposed to be safe to hold for a very long term. And if they don't meet the criteria, they'll be removed from the list when they do the rebalancing. And the top 10 holdings usually form around 40% of the ETF, because they allocate a maximum of 4% per stock. So you might end up with 40% in the top 10 stocks, and the remaining 60% will be filled by the 90 other stocks. And they also look for stocks which keep growing their dividends consistently over a period of time. And that's why you would end up with a list of stocks which have been increasing their dividends consistently for a while. And that's very important, because yield alone doesn't make sense if the yield is not going to grow every year. And we don't want stocks which keep cutting their dividends either. We want something that's growing consistently. And that's how you get an initial yield, and then you can project future income, assuming that this yield will keep growing every single year.
Okay. So, well, what are the top companies in
Yeah.
SCHD?
Yeah. So that keeps changing. I use Seeking Alpha for additional details, but soon we'll try to get this information within our app. The top 10 holdings I see are AbbVie, Amgen, Pepsi, Cisco, Lockheed Martin, Merck, Coke, Altria, Chevron, and Home Depot. I pretty much have all of these stocks in my own personal portfolio. Whatever decisions I made based on my logic is kind of matching with what ACHD does. So that's the beauty of ACHD. Right, so I've done extensive research to figure out the top dividend stocks that I want to hold. And when you look at ACHD's top 10 holdings, you'll find all of the tickers that I own. So that's why people like it, because somehow their algorithm picks the best ones that good dividend investors invest in.
That's cool. Well, how often do this ETF pay dividends?
This is quarterly.
Yeah.
There are some ETFs which pay dividends every month. This one is quarterly. They have a quarterly cycle, and they accumulate the dividends and pay it to the users.
How do they generate income?
Fund managers, you mean?
Yeah, yeah.
Yeah, so the fund manager charges a very small percentage management fee. I think it's around 0.06% or so. That's what I remember last time when I held SHD, but it's very low.
Yeah.
And that's another attractive feature. So currently I was seeing that the yield is close to 3.86% or something. So you'll be paying like 0.0% out of that. Everything else is yours. And that's another feature investors like about SCHD.
Yeah. With some other ETFs, it might be higher, right?
Yes, yes. There are other competitors to SCHD, but the problem with the other ones is they may have good dividend growth, but then they may not have the same yield. The yield might be much lower. So this is like a magic formula that Schwab has created, because Schwab uses the way they do it is they track other indexes. So there is a dividend 100 index which Schwab follows for this ETF. So each ETF follows some index, right? So, and there is an algorithm for that particular index. We'll discuss the name of the index and how the methodology works later on. But they
Yeah.
tie this ETF to that index, and what are changes are applied to that index will be applied to this ETF.
Okay. So you said that you did hold this ETF.
Yeah, I held close to 200, I think more than 200,000 at one point, and I was so happy receiving all those big dividends every quarter.
Yeah.
So, and there were reasons behind why I changed my strategy. We'll discuss that also later. Still, this is one of the best ETFs even today, and it's not going to change anytime soon. We can actually take a look at some of the details and some projections on why this is so attractive. It's
Yeah.
actually very exciting to me. So I can just show the app and things that we have within our tool to explain
Yeah.
the beauty of SHT. So I'm going
Let's
to
do
share my
it. Let's
screen.
do it. While you're
Thank you.
sharing your screen, please like, share, and subscribe. We will really appreciate your help. All right, let's have a look.
Okay, so I'm trying to get into SHT. So we have captured almost 2000 plus ETFs, and we currently get the stock price as of the end of last trading day. I can log into SCHD and I see SCHD is trading at 26.79. The stock has performed really well. If you look at the last 10 years, it's close to 200%, which means your money is almost tripled. And if you look at the all-time growth, which started around 2011, if you had put $1,000, it's 4x. So
Yeah.
if you compare with the month, now one thing you notice, the dividend adjusted rate is what we use. We don't use the actual stock price for historical chart. In my experience, what I had to do is I had to check the stock price, and I had to go to some other website to find the dividends and then adjust the dividends to see the total returns from my end. So we have merged both in our chart. It is dividend adjusted. This is what you would have received, assuming that the dividends were reinvested, ignoring tax and all that, right? So now it has not done as well as the market in the recent years. If you look at this, until almost end of 2023, these two are pretty close. And then because of the AI boom, S&P 500 has been doing much better. SCHD is lagging. This is one of the reasons why I had to switch, and it has worked really well for me because this is exactly the point when I actually switched to something else. We'll discuss that later, right? I'm glad I figured it out at that moment. But it doesn't mean that they have not been growing. It's if you look at the history, it's good. Now, my favorite feature is the dividends, right? So when you go to the dividends, you see this historical dividend growth. As you
Yeah.
see, the chart has been growing up, and the 5-year CAGR, cumulative average growth rate, is 11% or more for both 5 years and 10 years, and the yield is 3.86. Now this is awesome, right?
Explain me what it is.
Yeah.
What
So if you
mean
see the
these percentages?
Yeah, let's look at the chart below, right? So now you have yearly data. So in 2013, for example, this is the dividends you would have received if you bought one share of SHT, right?
Yeah.
And the yield at that time was 3.61. So you put $100, you would have received $3.61 for that. Now,
Yeah.
what has happened after that is every year that $3.61 has been growing at a very nice clip, right? And it had a bad year in 2023, but then it recovered again in 2024. We have to wait for 2025's final result. But overall, it's been doing excellent. And whatever money you put in at that time would be worth much more today because the yield on cost would have increased. Now, how do you check yield on cost and all the other details? We'll get to that page. But if you look at the quarterly information, here also you can see the actual amounts being paid. This will give you a clear idea of what would have happened. It captures all the quarters, like every quarter I'm getting paid, right? Now, if you look at the quarter of, let's say, 2013, it's 0.0664. That is what the first dividend was. But now it has been growing, and now every quarter, now the latest quarter, they paid 0.26. So look at the growth from almost 10 years ago, right? 10 to 12 years ago. For every share, you are getting much more than
Yeah.
what you used to get. So that is the attractive feature of SCHD, and it has been consistently growing, and that's why people are betting on this, that it will do well in the future too. Now, let's see the history and also project the future. This is my favorite part, right? So let's go to the portfolio builder that we have. And within the portfolio builder, we can select SCHD. So since, let's go with the 200,000 that I had in the past. So let's go with SCHD. What would have happened and what uh, projections we could see. So I'll assume I invested all 100% in SCHD, and we'll analyze our portfolio. So if you don't give a start date, it'll analyze from the beginning of SCHD's existence, and you see this chart here. So my 200,000 would have been a million if I had put my 200,000 back in the day, like 2011 or 12, right? So if somebody had invested that much money, they'd be a millionaire by now. And their current
Yeah.
dividend yield would be 3.86, which is awesome, right? And the total return, as you see, is 400%. So their money has almost 5x in that time. Their worst year was just minus 5%. Best year was 32, and the maximum drawdown during COVID, I believe, was 33%, right? And the CAGR is 12%. This is excellent results in the last 12 years for any person who has invested in this, even though it has not been doing so well in the recent past, in the last couple of years. Now,
Yeah.
what about projections? I used to spend a lot of time earlier in other websites. We have built this within our app now. To start with, we're giving a 6% growth, which is more realistic. I know the CAGR is 11%. It might be much more than 6%, but we'll go with a very conservative value of
Yep.
6%. We can even go lower, but I think 6% makes sense for our analysis. Now, for the next 10 years, with 6% price growth, that's the share price growth, and 6% dividend growth by reinvesting dividends, and I'm not contributing anything. In that case, if I had put 200,000 now, it should be around half a million. And then the cash dividends, which currently I would receive 7,700 per year, it would increase to 18,000, right? So this is just 10 years. But usually, long-term investors who are planning to retire, they go for 20 to 30 years. So now, if you go to 20 years, this 200,000, I believe, would have reached, yeah,
More
it's
than a
almost 1.3.
million.
Yeah, more than a million. And also your dividends have gone to 46,000. Now, if you look at the yield on cost, now you started with 3.86, right? But the yield on cost has increased to 23% in 20 years. And now 30 years is usually the time frame for most retirees. And if you are entering into SCHD when you are 20 years old, that's even better. But assuming you are 30 or 40 years old, I would stop at 30 here. And in that case, you see it's 3.3 million. So what's happening here is, because of compounding um, growth, the first 10 years was just 200 to 500,000. But then the next 10 years is like 1.3 million. And the next 10 years is just exploding to 3.3 million. And now if you look at the dividends, it's 120,000. So technically, if our projections work as they are, you'll get almost $10,000 per month from dividends, and your yield on cost has already gone. You don't have to work anymore. So if you have, this is called generational wealth, and this is what I was attracted to when I started investing. And
Yeah.
you see why, right? So after 30 years, I don't have to work, and if I give my money to someone, I also don't have to work anymore, right? If I pass on to someone else. So this is why
Yeah.
it's called generational wealth.
Yeah. But you do pay taxes on this.
Yeah, we pay taxes. So in the US, on dividends, if you hold the stock for more than a year, and if you sell the stock, you have to pay 20% tax for the share price, capital gains. But for dividends, it's just 15%. So at this point, the
Yeah.
tax is not that high. It might change. The subsequent governments might change it, but I don't think that's very likely. So
Yeah.
the tax you pay is not that high. If it stays at 15%, if you're getting 120,000, 15% is not too much. You still end up close to 100,000 per year, right? And
Yeah.
it's passive income. You're not working for it. It's just coming into your bank account. And the beauty is, you don't have to sell your stock, right? Who cares if the stock goes up or down, right? Even if the stock
Yeah.
market crashes by 50% at that moment, I think the dividends usually do not crash at the same rate as the stock price, because stock price is determined by the market fluctuations, but dividends
Yeah.
are determined by the management, and management does not just randomly cut dividends, because they are not worried much about the market. They care about the business and their shareholders, right? So the market does not decide what the dividend should be. The management decides, and that's where the drop could be much lower, especially for quality companies. If you're putting your money in quality dividend companies, dividend cuts are kind of low, and that's why SCHD tries to pick quality dividend stocks.
That's great strategy. That's impressive. Thank you, Shakti. I am really keen to know more. And also, if anyone has questions regarding dividends and dividend ETFs, that's the guy. He knows the business.
I know something. I can try to help. This is not investment advice, but I can give you my opinion and my
No,
knowledge that I've gained
yeah,
so far in the last several years.
yeah. Well, see you very soon. Thank you.
Thank you.
Well, bye for now.